TV18 and you're watching CNBC-TV18 Bazaar Morning Call. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning, hello and welcome to a fresh new edition of Bazaar Morning Call. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me as always, my colleague Sonia and Nigel. Good morning, guys.
Hi, good morning. Well, so many cues this morning, right?
Oh, absolutely. And the RBI is the highlight of the day in that sense. Although they have a bit of a reprieve because last night's comments from, Jerome Powell were not as hawkish. And I think that sets us up in a decent way. Markets have not been smacked hard as some were fearing. That all that optimism that there is a lot of disinflation in the system, etc. And, after the jobs data, which was so strong last Friday, Powell will basically push back against all of that. It's not happened. So, the headline is, and we can go into details in a bit, we'll play some sound bites in a bit as well. But, he was not as hawkish as many expected, many feared rather. And he did not meaningfully deviate from what he said during the post-FOMC press conference, which was last Wednesday. And I think that is a good thing. By the way, the market action in the US was absolutely bizarre. I mean, it was crazy. Markets rallied for the 30 minutes that Jerome Powell spoke. Markets rallied non-stop, right? And then they got to the high point of the day. Then they completely sold off. It went into the negative, the S&P, and then in the last hour, last 45 minutes, they rallied back and ended almost at the day's high. Not quite, but almost the day's high. The Nasdaq is there. The yields went up about 3.5 odd basis points. They sit at about 3.65, 3.68 odd percent. By the way, market pricing of what the Fed will do in terms of later this year still prices in 30 basis point rate cut, right? So what has happened is that post the jobs data, market is saying, well, maybe the terminal rate will be slightly higher, but they're not taking away the fact that they still expect rate cuts in the second half of 2023. And I think that is what stock markets also paid attention to. We have a big move higher in oil, though. We'll watch this carefully. Brent prices are now closer to 84 than they were, at about 81 or so a few days back. And this is important in terms of macros, etc. The rupee has been under a fair bit of pressure here in India. You want the single largest import to kind of rise sharply in terms of prices. So bears watching. The RBI decision today, I think if you asked economists a week ago, 2 weeks ago, they would have said, well, nothing. But I think after what we've seen in terms of the US jobs data, market pricing of the Fed terminal rate, I think a 25 basis point hike is expected. There's 2 hours to go for that decision, and we'll of course get you extensive coverage on that. But a 25 basis point hike is expected. What they say in the press conference, I think, will be critical as well. Just 2 levels. On the Nifty, it seems to be consolidating, right? I mean, look at yesterday's close. We seem to be consolidating under the 20-day moving average. 17,874 is that level. You need a decent close above it to kind of look higher. The Bank Nifty closed higher. It's doing better as compared to the Nifty for the last few, but it's still below its 20-day moving average. There, the 20-day is at 41,726. And supports basically come in at about 40,131. That's the daily lower Bollinger Band that we've been highlighting. So that's the setup. Tentative kind of start. I think that entire Adani-related news flow is slowly but surely fading into the background. And there is enough other stuff the market will fixate on, including, of course, the monetary policy today. Guys, hi.
Absolutely. And this comes against the backdrop of the market being, having a negative bias, right? So it's consolidating for the last few days, but the bias has been on the downside. And there's large selling that continues from foreign investors, so unabated selling from FIs. Yesterday, it was almost 2,500 crores, in fact, a little over that in terms of selling. And now put together in the last 4 trading sessions, FIs have sold over 7,500 crores. DI has bought a very small amount, so the bias is definitely on the downside from the foreign community. In terms of earnings as well, lackluster earnings both from Hero MotoCorp as well as from Bharti Airtel, the 2 nifty components of the earnings season. And we of course saw Tata Steel as well respond negatively to its numbers yesterday. So the fag end of the earnings season is turning out to be quite weak. Bharti Airtel was hit by an exceptional loss. Hero MotoCorp margins below 12% for 4 consecutive quarters now. This morning, though, the opening is expected to be on the positive side because of the good handover we got from the US. So The Dow was up about 250 points. As Prashant was also mentioning, the key takeaway from the Fed chair's comments so far is that inflation is on a declining trajectory. So in that context, things are looking good globally. The RBI policy, I think 25 basis points rate hike already priced in. But let's not forget that the Nifty has now lost about 2% from the high that we saw in the month of January. And that 17,800 mark continues to be a bit of a resistance on the upside. So, give and take everything. I know the RBI policy is important from a macro standpoint, but from the market trajectory view, I guess this market is on a downtrend. It needs some sort of trigger to take it out of that, consolidating bias.
Well, that's the hope, Sonia. And the Fed chair has done its part overnight. The dovish commentary that came in there, that will ensure that the SGX Nifty starts in the green. But as I've been saying, chasing the morning gap up hasn't been really beneficial. So today as well, given the kind of cues, you'll be waiting by to hear from the Reserve Bank of India governor. So don't chase that opener. The start will be good, but can the RBI governor deliver something that ensures that the end as well is good? Remember, the Nifty and the Nifty Bank, they're facing a bit of a resistance at around the 20 DMA, and we're unable to conquer that mark decisively. The FIs, they're net short on the index. Well, yesterday, not too much of positions were added, but the short positioning is at around 84% odd. And it seems, in case there is some good news, they chose to play it via calls, because yesterday they bought some calls, and they bought calls rather aggressively in yesterday's trading session. Close to around 8 calls were bought for every 1 put. Now, the PCI we have seen, when it comes to around 0.7, 0.71, 0.72 odd, that's when the markets see a bit of a bounce. Now, we're some distance away from there, but from a couple of days ago, from around 1.05 odd, it's come down to around 0.8. If you see that's trending lower, with the FIs being net short on the index, that could give reason for a bit of a short covering bounce. What did they buy yesterday? It appears the 18,000 call was bought. The premium out there is only around 12 to around 15 rupees odd. However, the 17,700 call and the 17,800 call, both of them premium between 50 to around 120, 130 rupees odd, they were getting written in yesterday's trading session, which brings us to the levels. Since the 17,800 call, 17,700 call, well, both of them were getting written, you have a bit of a resistance zone. That's 17,875 to around 17,950. I say that because that coincides with the 20 and the 100 DMA. On the downside, first level of support comes in at around 17,750 to around 17,600. If we break that level, maybe we'll revisit the recent lows. That's what we saw on budget day. Nifty Bank as well, similar setup. The 100 and the 200 DMA are in that vicinity of around 41,750 to 41,850. On the downside, we've seen some bit of support at around 40,800 odd. So let's see whether or not that level can hold out. SGX Nifty suggesting a gap up. Don't chase that. At some point of time during the day, that market is likely to experience a fair bit of volatility and maybe, in fact, move through the low point of the day as well. So let's see how that pans out.
All right, Nigel, thanks very much for that. Well, let's quickly tell you what's lined up here over the next 30 minutes or so of the show. We get you updates from markets across the globe. Ed Yardini of Yardini Research will join us to discuss the global setup. Our research team gets you the top 10 stocks to watch out for in a little bit from now. And we get David Choksi to talk stocks and fundamentals with us at 8:30. So that's the lineup here over the next 30-40 minutes.
All right, so we do have a lot of calls coming in as well this morning. First up, a view from Mahesh Nandurkar of Jefferies, who says that the FY23 Nifty earnings growth has been stable so far during the Q3 results season at 12%, and trends suggest that large cuts are unlikely. He also says autos, lenders and IT has seen upgrades, while consumer staples, durables, industrial, cement, metals have seen cuts in earnings. He adds that margin beat has driven surprises for lenders and autos, and the margin picture has been better for consumer companies. He also says they maintain their preference for domestic cyclicals right now.
Money market views coming in from Kunal Sudani of Shin & Bank, who says Fed Chair Powell's hesitance in appraising strong U.S. non-farm payrolls data suggests no more than 2 rate hikes, which are already known. Mixed signals surrounding U.S.-China tussles, pullback in yields, underpin bearish buyers. Immediate resistance for the dollar index is at 104.1 levels. For the Indian rupee, he says 82.5 to a dollar acts as a support, while 82.95 to a dollar is a resistance.
Okay, and on the bonds, Parul Mittal Sinha of Standard Chartered says domestic bond market has been under pressure this week post a global sell-off driven by strong US jobs data. She says today's market moves will be dictated by the RBI MPC decision, where she expects the RBI to hike repo rates by 25 basis points. In line with market expectations, she also expects the 10-year benchmark bond yield to trade in a range of 7.2 to 7.35% for the rest of the week.
All right, let's get you important comments from Fed Chair Jerome Powell. He didn't rock the boat. Listen in.
These are the very early stages of disinflation. So the services sector really, except for housing services, pardon me, is not really showing any disinflation yet. So our message really was this process is likely to take quite a bit of time. It's not going to be, we don't think, smooth. It's probably going to be bumpy. And so we think that we're going to need to do further rate increases, as we said, and we think that we'll need to hold policy at a restrictive level for a period of time. The labor market's extraordinarily strong. And by the way, it's good. It's a good thing that inflation has started to come down without it. That has not happened at the cost of a strong labor market. We anticipate, is what we said, that ongoing rate increases will be appropriate. And the reason is we're trying to achieve a stance of policy that is sufficiently restrictive to bring inflation down to 2% over time. And we don't think we've achieved that yet. So we said that. And you know, now you see the labor market report, and I think, again, financial conditions are more well aligned with that than they were before. We expect, you know, significant progress on inflation this year, and again, it's our job to produce it. And I want to say again, you know, we throw these numbers around, but the reality is we're going to react to the data. So if we continue to get, for example, strong labor market reports or higher inflation reports, it may well be the case that we have to do more and raise hikes more than is priced in.
All right. Ed Yardeni is joining us, president at Yardeni Research. Ed, as I said, Jerome Powell did not rock the boat, or maybe he wanted to and the markets ignored him. Whatever it may be, what's your sense? Will markets carry on?
I think markets will carry on. I think the message that came through loud and clear, not so much today, but in that Wednesday press conference, is that disinflation has started. So at least he's acknowledging that we're seeing some progress in the right direction on the inflation front. And he has said that he's, I think, pleased with what he's seeing in disinflation in goods, where he wants to see progresses in services. And we're just going to all have to wait and see how that plays out. I think inflation is going to come down to 3 to 4% this year. And then after that, I think it could go lower. And I don't think it's going to take more than a 5.25%, 5.5% Fed's funds rate, which is what they're aiming for right now.
Okay. Ed, hi, good morning, and thanks for joining in. Back home in India, we have our own RBI policy as well. The expectation is that the 25 basis points rate hike could come through. But do you see the worst of the rate hiking cycle now behind us? Inflation is, of course, improving as, the Fed chairman just pointed out, that they're progressing well. You think the worst of the macro challenges now, both from a global and an Indian standpoint, are now behind us?
Well, I can speak to what's happening in the United States. We've gone from a zero federal funds rate, probably with 2 more rate hikes of 25 basis points, will be at 5.25% by May, and that's a huge increase. So certainly, the worst of it is behind us. I guess in this business, nothing is certain, but clearly, such a big increase in interest rates is not likely to occur from here. I think from here, we're likely to see 25 basis point increases until the Fed feels that they're in the right place. And they've said that 5.25% is the right place. Inflation's coming down. And I think Powell indicated that he doesn't really mind if the labor market data is strong, as long as he sees inflation continue to moderate.
Hi, morning, Mr. Yardeni. So you're factoring in a couple of 2 more 25 basis points hikes, right?
Yeah. Yeah, it's consensus.
All right, got that. You know, if the Fed is going to turn a little bit dovish from here on, it'll be good for commodities. And in the past, you've stated that commodity markets could do relatively better. And that sort of a scenario, would your preference still drift towards China more than India? Or do you think post the recent underperformance, well, India could get some part of the flows? Yeah.
Yeah, I haven't been a promoter of investing in China because of the uncertainty of the regulatory and supervisory environment. I know that they've turned more pro-business recently. Once they got rid of the zero COVID policy, they do want to stimulate their economy, and the stock market's had a big move. But for long-term investors, I'd rather be in India than in China in terms of rule of law and some semblance of accountability. Generally speaking, I would say that the global economy the economy's economic outlook is improving. A few months ago, people were worried about a recession in Europe and a recession in China. And now there's a perception that both of those economies will grow. And now I think people are coming around to a view I've had that we're not going to have a recession in the U.S. So it all looks like a pretty good environment for commodities.
All right, a great environment for commodities. Ed, always a pleasure speaking with you. Thanks a lot for joining in. We, of course, are tracking minute by minute what's happening with Jerome Powell and the US Fed. But back home, we have our big RBI policy as well. Lata Venkatesh is joining in to tell us what to expect. Lata, I think a rate hike is most expected. But any indication that you're expecting of the end of the rate hiking cycle from the RBI?
Oh, you put your finger on it. That would be watched. You know, even the rate hike, it is going to be a deeply divided house. Not just because our poll, our own citizens, MPC, all of them were divided. There was no unanimity anyway. The RBI's MPC itself, 2 external members had clearly indicated dovishness. Jayant Verma has said 6% and that is it, even, 2 policies ago. So there is a big element of dovishness within the MPC itself. But therefore, the stance becomes more important. Now, the point is, by the time you come to the next policy, not only is inflation coming in lower than expected, by the next policy in April, you will have this quarter, the third quarter's GDP number, and that is going to be 4.5%. You know, when you go to a policy with a 4.5%, it's very difficult to cut. It's very difficult to hike.
Yeah.
So in this stance, will they tweak it in some fashion to indicate that probably we are ending the rate cycle or coming to the end of the rate cycle? But you can never be sure because there is a rupee element. And if global central banks are extremely hawkish, depending on jobs data, the ECB hawkishness, I don't know how much the governor will be willing to give away. If he indicates that, if he doesn't change the stance and the statement is not all that indicating of an end of the cycle, we could expect yields to go up by, 5 basis points. Otherwise, if it's just a rate hike and, a stance indicating possibly end of road, then maybe there'll be no impact at all. But all eyes will be on liquidity because very soon, by the time April starts and there's a massive borrowing program, the system is going to get into negative, deficit. So whether he says, I will do an OMO, all that will be very important for cost of capital for the bond yields. That is going to be watched. And as you should expect, a part of the press conference will be hijacked by the Adani issue.
Okay, all right. Lata, you said a divided house, a divided couple of committees as well. Out here in the studio, we'll go according to what Lata says and vertically be unanimous. Thanks so much for joining in. In the next couple of hours or so, you could join in and get the live coverage of that event as well. For the time being, we'll slip into a short break. You come back, all the top stocks you need to track will be lined up for you.
When our big boss was MD, he used to take care of us.
And our Prince Sahab is busy ensuring his family. Oh, big boss, you?
He's busy obtaining term insurance for his family. After all, office is also our family, am I right?
Let's close the deal.
Thank you.
Verma ji, will you have tea with this prince?
LIC's Group Term Assurance Plan takes care of your office family.
Bali, here I come. Beda, check the weather in Bali. Passport? Where is my passport?
Today 23 degrees, tomorrow 24.
Not today or tomorrow, after 3 months. Khanna uncle is taking all of us to Bali. He has got some solid investment tip. Doubles the money in 3 months.
Let me guess. He's received some kind of hot SMS tip, right?
Correct. How did you know?
I receive such SMSs all the time.
Acha?
If these SMSs were reliable, we'd be on a world tour every 6 months, na? Papa, relying on anonymous SMS tip? Be prepared to take a dip.
So this won't be used at all?
Oh.
सोच कर, समझ कर, invest कर.
When it all began, I had only a few runs on the scoreboard and fewer spectators in the stands. And then what? I worked harder, a few more runs, and a few more spectators. And that's how from Saurav, I became. When you live up to expectations, then winning people's trust is possible. And trust results in Bandhan, like Bandhan Bank, India's Bandhan Bank. Aapka bhala, सबकी भलाई.
Different ages, different stages. Get best protection with Star Women Care Insurance Policy. Always at your doorstep.
भैया वो फ्री वाला शुगर है ना यार.
भैया जी फ्री का ही चाहिए तो आस्था ट्रेड पे डीमैट अकाउंट खोल लो ना. यहाँ पे इंट्राडे स्टॉक ट्रेडिंग बिल्कुल ब्रोकरेज फ्री है.
इंट्राडे स्टॉक ट्रेडिंग बिना किसी ब्रोकरेज के सिर्फ आस्था ट्रेड फ्लो ऐप पर. Invest once and enjoy guaranteed maturity with life cover with LIC's Dhan Varsha, a single premium plan for your family's security and prosperity.
Bertram, meet Hector, the car that pampers me.
Pampers you, sir? Only a car.
Hello, MG. Good morning.
Good morning. What a beautiful day.
This is my favorite. Traffic jam assist. Ta-da!
Sir, please.
Relax. Hector's got this. Told you, it pampers me.
The next gen MG Hector. It's a human thing.
Get the grip of good health even after 50. Presenting now Star Health Premier Insurance Policy. Always at your doorstep.
Hi folks, welcome back. We have our entire research team joining in now to help us prep for the day and so many stocks to talk about. So let's get Reema first on board to tell us why she's watching Bharti this morning. Reema, how did the numbers look?
Well, at the operational level, it's bang in line with street expectations. The company's reported a consolidated revenue growth of 3.7%, a little bit of a margin improvement of 60-70 basis points. But the bottom line, the profits have declined by 26% on a quarter-on-quarter basis, missing street expectations, and that's because of an exceptional charge of 670 crore, which pertains to some license fees that they had to pay for their D2H business. But if you strip that out, operational numbers are in line. Now remember, Bharti Airtel is a combination of the Africa business, which is 30% of revenues and EBITDA, and the balance is their India business. Majority of it comes in from the mobile services, the connectivity service. The balance is their D2H business. They've got a little bit of enterprise business as well. So let's talk about the mobile business, which is directly comparable with Jio as well as Vodafone Idea. Now here, Bharti Airtel's India mobile business performance is very similar to Reliance Jio. Bharti reported a 2.1% growth quarter-on-quarter in the India mobile revenues, exactly the same as Reliance Jio. Both the companies had reported a margin expansion. For Bharti Airtel, the margin expansion stands at 140 basis points. Where Bharti Airtel has done well compared to expectation is the subscriber growth. The subscriber growth at 4.4 million on a quarter-on-quarter basis is the highest that we've seen in the last 7 quarters. The 4G subscriber addition is good, and the ARPU expansion continues for yet another quarter. On the whole, in line with expectations, a steady performance. There are no positive surprises, but there is a bit of a miss on the bottom line. Back to you.
Okay, thanks a lot for that miss on the bottom line. Well, for Hero MotoCorp, the numbers came in post-market hours yesterday. I'm going with red because when the numbers were nothing exceptional. In fact, they were weak, largely in line with expectations. The margins were down 70 basis points year on year, coming in at 11.5%. And in fact, this is the 4th consecutive quarter of sub 12% margins for Hero MotoCorp. So they have been facing a lot of margin pressures in the quarters gone by. The revenue growth was barely about 2%, in fact, sub 2% on a year-on-year basis at 8,031 crores. As I said, the core EBITDA has also fallen, about 3.7%, margins under pressure, and the profit growth of just about 6.3% is what we've seen. The company, of course, in their press release mentioned that they are expecting a recovery in market share aided by new launches in the premium segment over the next few quarters, but that is still hope. For now, the numbers have been lackluster, and we've been seeing it in the stock as well. The stock has done nothing for investors, absolutely range-bound in the last 2 years. So, I'm going with red over there.
Okay, all right. Red on Hero MotoCorp, though the commentary was positive. Interesting. Yesterday, there were a couple of auto ancillary companies. On their con call, they sounded rather cautious, actually. So, it's split down the middle, I'm guessing, in terms of commentary going ahead. But let's hop across to Vivek. He joins in to tell us about Adani Green. Morning, Vivek.
Well, good morning. Adani Green, declared its results just prior to market close yesterday. While the revenues were quite strong, coming in almost 40% higher, closer to the 1,973 crore mark. The overall EBITDA fell almost 18% on a year-on-year basis. However, the silver lining was the power supply EBITDA did grow quite significantly on a year-on-year basis. Margins were quite muted, coming in close to the to 43% mark, while profitability jumped up almost doubled on a year-on-year basis, a little over the 100 crore mark. Now, a couple of key points to keep an eye out for. Operational capacity, for the 9 months is up almost 35% on a year-on-year basis, closer to the 7,324 megawatts. And the company says that they will complete 8,300 megawatt by the end of FY23. And also the other thing to keep an eye out for, even Adani Green, in line with Adani Group companies, other Adani Group companies have said that they will be appointing an independent auditor to do a complete assessment of all of the transactions that have been taken so far.
All right, Vivek, thanks very much for that. This is Adani Green in focus. Well, Astral is the next one we're going to talk about. Sonal is here with more. Sonal, morning.
Good morning, Prashant. Well, Astral Limited numbers on a YY basis were lower as expected because of the lower PVC prices that we saw. So revenues are up 15%, but EBITDA declined by 10%, leading to a margin compression of 400 basis points to come in at 14.5%. Profits also accordingly were down 26%. However, margins are up on a quarter-on-quarter basis at 14.5% versus 13.7%. So that has come in as a relief. The plumbing business saw a decline of 400 basis points in terms of margins. The paints and adhesives business saw around 200 basis points decline in terms of margins. However, now PVC prices, they have increased, and the management commentary also looks positive as far as demand and pricing is concerned. So the stock could see some red but will recover in the later trade.
All right, thanks a lot for that. That's pipe manufacturer Astral. Let's see what happens with that stock. But Credit Access Grameen is the other one we're looking at. Abhishek is here to tell us why he's watching that. Abhishek, good morning.
Good morning, Sonia. So it's an operationally strong quarter which continues for Credit Access Grameen. Disbursements are up 2.76% YOY and about 11% sequentially. The AM growth is strong, about 22% YOY and 7.5% sequentially. The best part of the result is that they have seen customer acquisition this time around. So customer base has grown by 5.5% YOY and about 3.7% sequentially. The customer base overall is at 10-quarter high. Asset quality has improved, led by the fact that write-offs continue to remain elevated. Net interest margin has come down slightly by 10 basis points quarter-on-quarter, but no taking away from the fact that P&L is strong. NII growth of 30.3% YOY and about 8.5% quarter-on-quarter. The PAT is up more than 85% YOY and about 23% on a sequential basis. Back to you.
Okay, all right. Thanks for that, Abhishek. Well, going back to Vivek. Vivek, you're tracking Thermax and NHPC. How are those numbers?
Thermax, it's a positive surprise from the company this time around. Good set of results. Revenues up almost 27% on a year-on-year basis. EBITDA, core EBITDA is up almost 42%, and margins too coming in quite strong at 7.9% versus 7% last time around. Profitability is up 60%. Key highlight being the fact that, strong revenue growth seen across all of the segments. In fact, the chemical segment saw the best growth. Now, the other important thing to keep an eye out for, at the end of Q2, management had actually guided for a flat order inflow. However, order inflow was up quite significantly, giving a bit of a beat. In fact, Macquarie says that the margins as well as the order inflows were the key positives this quarter for Thermax. Now, coming to NHPC, overall there was strong growth. However, there was an impact on the profitability. Revenues up almost 20% on a year-on-year basis. Margins coming in at 66%, while profitability was down almost 17% again on a year-on-year basis. Key thing to watch out for in NHPC, the company has almost 7.5 gigawatt worth of projects which are expected to be commissioned soon, and the timeline of these commissions, especially for the Lower Subansiri project, will be something key to track out for.
Okay, thanks a lot, Vivek, for that. Plenty of stocks in the specialty chemical space. Naveen Fluorine, Deepak Nitrite, GNFC, and our expert is here with us. Sonal, what's the takeaway from all the numbers?
Well, it's a mixed set here. Let me start with the strong one, Naveen Fluorine. It was a top-down beat and growth was seen across all the segments. So revenues were up 48% at 563 crore rupees versus estimates of 514 crore rupees. Gross margins were up 70 basis points at 56.3%. EBITDA up 58%. Margins have come in at 27.6% versus an expectation of 26.5%. And profits are also up 55%. And it was led by growth across all the segments. So see a green on this stock. Deepak Nitrite, well, numbers were slightly lower than what IIFL was estimating. So revenues did see an increase of 16%, but EBITDA was down 10.5%. Margins declined 500 basis points, and profits were down 14% as well. However, if we look at this segment, so advanced intermediates, EBIT was flat. Phenolics was down on a YY basis, but there was an increase on a quarter-on-quarter basis basis in the phenolics division. So that is a positive. GNFC, weak set, revenues up 12%. However, it was a margin miss. EBITDA down 35%, margins down 1,200 basis points at 16%, leading to a profit decline of 40%. Expect that stock to be in the red today.
Okay, thanks a lot for that. So those are plenty of stocks to focus on, and we'll of course keep revisiting them through the course of the next 2 hours. We'll get some guests in as well. Let's do a quick recap. Stocks with positive news flow. There's Credit Access Grameen, there's Thermax and Naveen Fluorine. So 3 stocks with positive news flow. While on the negative side, there's Bharti, Hero MotoCorp, Adani Green, Astral, NHPC, Deepak Nitrite and GNFC. But another really important internal to track this morning is the way Brent crude has been moving. There was a sharp 3% surge in Brent crude overnight. Brent is now almost at $84 a barrel. Manisha Gupta joins in for a roundup of all the action there. Manisha, good morning.
Sonia, thank you for that. Well, yes, very volatile moves continue in case of the crude oil prices. So apart from the dollar index coming off from its highs of 104 to almost 103 has been supportive across asset classes. For crude, it also has been about the fact that the Saudi Arabia has increased prices for its Asia consumers for the first time in 6 months as they see demand coming back. Also, Turkey Ceyhan terminal will reopen today post-earthquake, but the markets do believe that it would only be partial, and there are supply concerns now coming in from Syria and Turkey both. And then the likelihood of strong Chinese demand continuing has been supportive. Markets also are looking at the fact that you are looking at the U.S. crude inventory seeing a decline by 2 million barrels in the previous week. We have seen strong gains come back for natural gas. That one gained by 5% overnight. The coal prices also are off one-year lows as the Chinese demand comes back into the market. It is also about the Powell testimony saying that the rates will likely to continue, but disinflation seems to be coming in, is really supportive across commodities. So whether it's precious metals, rubber, biofuels, all of that seems to be trading in positive.
All right, Manisha, thanks very much for that. Take a quick break here. Devin Choksi of KR Choksi will be joining in to talk stocks. We also will have the management of Kalyan Jewellers to discuss their third quarter results, which came up earlier. Stay with us. All of that coming up.
Suresh.
Yes, brother.
Please take care of it, huh?
Sure, I'll do it.
Really? You're concerned for it even if you're going to the village for just 2 days. But you never think about us this way.
Everything will be fine. My Rickshaw Union Group has taken LIC's Group Micro-Term Assurance Plan. Papa! Wow! Now, no matter what, my family will keep moving forward.
Get LIC's Group Micro-Term Assurance Plan. Keep your family secure.
भैया वो फ्री वाला शुगर लेना यार।
भैया जी फ्री का ही चाहिए तो आस्था ट्रेड पर डीमैट अकाउंट खोल लो ना। यहाँ पे इंट्राडे स्टॉक ट्रेडिंग बिल्कुल ब्रोकरेज फ्री है।
इंट्राडे स्टॉक ट्रेडिंग बिना किसी ब्रोकरेज के, सिर्फ आस्था ट्रेड फ्लो ऐप पर।
राशि की स्कूल फीस, घर का किराया, कितनी जिम्मेदारियां हैं सर पे। तुम तो टर्म लाइफ इंश्योरेंस लिए बिना ही चलेगा।
पॉलिसी बाजार पे 1 करोड़ का टर्म लाइफ इंश्योरेंस सिर्फ 430 रुपए महीने से शुरू।
देखो 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 नया टीवी देखो। Got the veggies from Chotu's shop? He gives the right rate.
Yes, Papa.
Decided. 55-inch TV on this wall.
Oh, super. I'll write out the check tomorrow.
No, you don't. I will, with my own money.
Oh, wow. How come?
Look at this advertisement. 30% assured returns on investment. I am also going to invest my money.
So vegetables only from Chotu's shop, but investment advice from anyone? Papa, trusting a stranger's advice is never wise.
But what about the TV?
सोच कर समझ कर इन्वेस्ट कर
For how long will you continue being tensed about the future? With LIC's new Pension Plus, make your own pension plan because this plan creates market-linked wealth for your future. Moreover, this plan comes with guaranteed additions and also offers various options for receiving pension so that you grow young and tension-free. LIC, हर पल आपके साथ।
That's the boss's cabin. The canteen is behind. Morning, ma'am. Morning. And you are here. Good morning. Good morning.
मैम और कोई ऑप्शंस?
लाइफ में और कहीं ऑप्शंस मिले ना मिले, मोतीलाल ओसवाल आपको देता है ऑप्शंस ट्रेडिंग में ऑप्शंस। इंट्रोड्यूसिंग मोतीलाल ओसवाल ऑप्शन स्टोर विद अ वाइड रेंज ऑफ ऑप्शंस इन ऑप्शंस ट्रेडिंग। एक्सप्लोर करो ऑप्शन स्टोर। Investment in securities market is subject to market risks. Read all the related documents carefully before investing.
Welcome back. Hope you're having a good morning. For starters, the SGX Nifty is suggesting a gap up with a gain of close to around 70 to around 80 points, currently around 60 points odd on the back of the Fed chair's commentary overnight. But let's focus on a couple of stocks and sectors, and we'll discuss that with our guest. Dipan Mehta will be joining in just a bit. Cement stocks, they're going to be in focus because yesterday the finance minister said that the panel is likely to relook at the taxation, the GST tax on cement. Remember, as of now, it's around 28% odd. Jeffries has come out with a note. They say it'll be good because it could push volumes. The cement prices come down, volumes will be pushed through. Though it will also result in pricing coming down by around 7 to around 8%. It's a positive in the near term for pricing, though, is what they mentioned. So good for volumes, though cement prices could come down. Before we go to Dipan, let's hear out what the finance minister, Nirmala Sitharaman, indicated that the government is open to considering a reduction in this 28% GST on cement. Let's hear out.
On the GST, the end user in non-bulk cases, you're talking about individuals. Bulk cases, of course, it can be government, it can be projects which are being undertaken by private sector as well. I see your point. Let's say I'll have the fitment committee look into it and then, if necessary, take it to the council.
Well, Deven Choksi of KR Choksi joins in on the show. Hi, Deven. Thanks so much for joining in. Well, Deven, you know, cement prices, if it comes lower, then it could push through volumes. So this GST cut, it could be a long drawn process, first of all, because the finance minister recommends it to the panel, then the panel takes it forward and then sees whether or not this recommendation is in order. And keep in mind, if there's a cut of closer on 10%, rough estimates that are pulled out suggest that 10 to 15,000 crores of loss to the government as well in terms of GST collection. Your view on this move, and do you think it could actually happen? Because I heard this a couple of years ago as well, and at that point of time, it didn't happen.
Hi, Nigel. Good morning. Well, I would think that there is a case for reduction in GST. And maybe I think in many commodities and many items, I think it should be the possibility. Primarily two reasons, as I see it. One, our government is having sufficient amount of cushion now with the higher collection on a sustainable basis of close to 1,50,000 crore per month. Given that kind of a situation and given the increase in the economy and the size, along with the volume increase in different commodities, in my viewpoint, I think it probably makes sense to bring down the rates to, I think, a little bit more parity level, which would eventually help the cost of construction and cost of infrastructure coming down. Should that happen, then in that case, I think it's a benefit to overall, I think, participants whoever I think are involved into building the infrastructure into the country. As far as I think the impact on the cement company is concerned, I'm not too sure immediately, I think, whether I think one can count on impact. Because the volume increase in cement is largely the case for the spending which is happening either on housing side or on the infrastructure side. We are clear rather on this particular aspect that there is going to be a case for higher consumption of cement, given the kind of thrust on infrastructure that the government has continued, including in this budget announcement. So from that perspective, I think we find that the cement consumption would be increased, and that could possibly neutralize the revenue loss that the government may have made, I think, in the process.
All right, Devin, stay with us. You know, I just want to highlight and get your views on Paytm. This is interesting because, I mean, the stock at one point yesterday was up 10%. It ended only about, I think, 5% higher, 5.5% higher. These are the three new things, right, which have happened since. The EBITDA was the EBITDA positive was ahead of schedule, and that's why markets liked it. But there are three new things this morning. Macquarie has double upgraded the stock, and you know that is important because Suresh Ganpati, the analyst at Macquarie, was firmly negative on the stock. Is widely tracked, well respected. He's done a double upgrade. I think he's got a price target now closer to 900, 800 something, but closer to 900 now. That's number one. Nimesh yesterday pointed out that on D Street Chatter, a segment, that perhaps there is another block coming in Paytm. So that's point number two, and that is important as well. I mean, if you are, if there is, if you're trading, I think this kind of thing becomes important. There is another block which perhaps is coming. And number three, they've this morning, I think, released the January business update numbers. I've not gone through the details, but I think they look fairly decent. So just a couple of things, which not couple, but three things you need to note on Paytm. I don't know, Devin, if you have a view here. Many do believe that after the kind of price damage it has seen, it's possible. I mean, you see 30-40% kind of trading rallies. We've seen those before and would not be unusual. Your sense?
Yes, Prashant, I think from 700-800 crore worth of loss per quarter to bringing it down to 300 to 350 crore worth loss per quarter, I think is definitely, a signs of improvement. And I think one would probably look at, this improvement in a very positive manner. Of course, I think the other aspect of the business, which is distribution aspect of the business, which is possibly resulting into the better margins for the company, and I think allowing them to cover the loss in a systematic manner, is, I think, very interesting to watch out for. Whether it would sustain and whether it would grow, I think that would remain important. And the loss-making pockets like retail and others, I think whether they would continue to be there in the system, I think as far as the company's operations are concerned, I'm not too sure on that aspect. However, I think would like to see if the sustainable aspect of the improvement into the profits and break-even situation as the management has predicted. If that happens, then certainly I think, at least some amount of stability will come into the price. Not too sure how much participation I think it would invite immediately from the investors.
Okay. I also, Devin, good morning. I wanted your thoughts on how one should approach Bharti now post the numbers. Of course, there was that, loss that hit the bottom line this time around. So the profits were under a lot of pressure. But on an average, most brokerages continue to have a buy on the stock. Target prices anywhere between 900 to 1,000 on Bharti, whether you look at CLSA, UBS, etc. Your thoughts, if you do see a dip, is it an opportunity to buy into some of these telecom names?
Yes, Sonia, good morning. Well, I think the downside certainly remains limited, and because the prospects for upside, I think, are definitely counted here. On one side, the ARPU increase definitely, I think, is something which the company has been talking about, and they are now actually seeing the ARPU increase happening for them. With the correction in the tariff, I guess, I think the subsequent quarters also you are likely to see the better ARPU from the company. Also, at the cost of Vodafone Idea, they are also acquiring new customers. And this new customer acquisition in this quarter also has been, I think, a very smart number that the company has ended up acquiring. A point to remain a little bit more cautious would be that the company is in a capex mode, and this capex mode is likely to continue for a longer period of time, as I see it, because 5G rollout and related infrastructure, which is required in the order of the business conditions currently. In my viewpoint, I think that could possibly keep the profit under suppressed to a certain extent. So I think these are the few points on which I feel that I think yes, downside is limited, but maybe I think you can see gradual upside with the increase in the ARPU and improvement in the profits.
All right, Devin, what about the steel pack? Tata Steel, normally for quite a few quarters, you see Tisco doing the disco. Unfortunately, this time around, they disappointed, and I'm looking at a lot of notes. There's earnings cuts out there.
Did you make it up yourself? Yeah, Tisco doing the disco?
I've used it quite often on the channel as well. Where Tisco does well.
That's the first time I heard
The problem is there's no disco for the next couple of quarters because Europe is going to struggle. Devin, I mean, what's your view on the stock? At around 111 rupees. So sometimes you like Tata Steel because of the parentage, because they're backward integrated to some extent. But Europe is a spot of bother, preventing them from going on the dance floor. Your take on the stock?
So in last 2 quarters, I think they've had the rough patch, largely because of the higher input cost. And as a result of which, I think a significant and a sharp fall in the commodity prices globally, of course. Because of that reason, definitely in the last quarter, the company had to adjust, I think, the inventory at the net revenue valuation, as they call it as. given that kind of an accounting adjustment that they did, I think definitely last quarter that was not good. I think they made the loss. But now the situation is really stable. Crude oil prices are stable. Commodity prices are relatively stable. China has opened up. I think there is a good demand, I think, coming up on that front as well. And at the same time, I think the margins are unlikely to remain on a negative territory side. So given that kind of a situation, I would rather like to believe that the Tata Steel kind of performance will be relatively stable to better going forward. However, commodities are most vulnerable to the global situation, I think, which we are probably experiencing currently. So one can't be very confidently saying beyond the quarter about how exactly the performance would likely to be.
All right, Devin, stay with us. We have to take a quick commercial break here. Let's do that. We are back. But before we slip into that break, let's just quickly run you through what lined up in the next 30 minutes as we come back. We'll have Anuj join us at 8:45 with a quick trade setup. We'll get you the top stocks of the day. There is, of course, technical trading ideas coming up with our experts. The standout brokerage link of the day with Nimesh, of course, also comes up before markets open. And, of course, our stock board, the top stocks to watch out for with regards to news flow. We'll revisit those names in a bit from now. So it's power-packed. Stay with us. Lots of stocks we're going to discuss in a bit.
Friends, I want to share some good news with all of you. Firstly, like always, we have performed very well this time also.
But what will we get?
Secondly, we shall invest in employee benefit.
Come on, now tell us what will we get?
And thirdly, we shall invest in LIC's group funded plans.
Great, we'll get everything! Now, leave encashment, gratuity, and along with pension, our future is secure.
Yes, employees' real benefit lies in LIC pension and group scheme.
चाहे खरीदना हो अपना घर या हो रिटायरमेंट के लिए फाइनेंशियल प्लानिंग, मुझे फ्यूचर की कोई चिंता नहीं क्योंकि मेरे पीछे SMC है.
SMC, money wise, be wise.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
When it comes to making your drive electric, never settle for the ordinary. Go EV with India's #1 EV, Nexon EV. Proven and trusted by over 40,000 customers. Feature loaded and safe, offering a premium driving experience. Now with enhanced range and an exciting new price. Nexon EV, drive what drove India electric.
Cashless hospitalization is easy. Get details on our network hospitals at www.starhealth.in. Always at your doorstep.
आप जानते हैं 15 सेकंड का ऐड कितना लंबा होता है? काफी बोरिंग है, इसलिए डायरेक्ट बता देता हूँ। आस्था ट्रेड पर ऑप्शंस में 5,000 रुपए का ब्रोकरेज फ्री। तो बनाइए फ्लो ऐप पर अपना डीमैट अकाउंट।
अपने घर और कमर्शियल स्पेसेस को बनाइए अल्ट्रा मॉडर्न, इनोवेटिव, इको फ्रेंडली with quick installation. All this at the one-stop destination, Europratik.
My journey of insurance and investments began at the same time when I invested in LIC SEEP. In this fast-moving world, SEEP can balance your funds with security and growth. SEEP will take care of the ups and downs of the market and will give you fruitful results so that you enjoy the ride. And when SEEP is with you, you can soar high.
LIC's unit-linked insurance plan SEEP offers savings and protection so that you can soar high in your life. LIC, हर पल आपके साथ.
Okay, welcome back. There's 13 minutes to go for the pre-open session. The SGX is indicative of a 50-odd point higher start. Anuj is joining in with a quick check on how he's seeing things. Anuj, hi.
Hi, Prashant. Morning. Well, directionless here, right? But it looks like some kind of bottom formation, especially after that panic factor because of the Adani group. But we need to close above 17,850, which was the last top for the market on a closing basis. To sort of break out. What could happen today is the market will be about two halves. The first half, my sense is, could be about IT stocks. Nasdaq has bounced right from the 10-day exponential moving average after a 2-day fall. And Nifty has also fallen for 2 days and has gotten to a 10-day exponential moving average. So I think the IT stocks, especially the mid-cap IT pack, could outperform in the first half. Though Reliance is a bit of a problem for the market. And because global cues are strong and the Adani factor has more or less stabilized. The second half could be about the banks. On the Nifty, there's been very strong call writing at 17,800 with the premium 56. So again, that 17,850 level becomes very important, and bigger rally will happen only above 17,850. The other problem for the market is that there's been lack of conviction from put writers. If you see the data, the put writing is only at 17,700 and 17,500. So if you break 17,635 and make a lower low, then maybe even 17,500 opens up. And the clincher today would be the bank Nifty because you have the RBI monetary policy. So post 10 a.m., I think the best case scenario for market is that there's a 25 basis point rate hike and the governor gives an indication that there's going to be a bit of a pause. And if that happens, then I think the banks could rally. The other problem for the bank Nifty is especially the earnings reaction. Even State Bank of India, after all the clarification and all, has not been that great. So let's see. I think, look, this is a market which sort of, I think, lacks triggers to either break out or break down. So maybe you'll have to be in the range for some more time.
Okay, well, range-bound market. I guess that's when you get the best ideas and you get to perhaps buy into those stocks which have seen a big dip, right? Thanks a lot, Anuj, for joining in. Let's do one thing. Let's go across to our technical guests now to tell us how to approach trade. Sudarshan Sukhani and Mitesh Thakkar. Sudarshan, good morning. Of course, today you have that big event, which is the RBI policy. But once it moves out of the way, do you see this market moving up or down? Because that's become a bit of a, sort of a debate right now. The market is really in a tight range. Do you see it breaking out either way?
Good morning. Sonia, is going to break out in one way or the other. Now below 17,650 after the news event and once the market digests the news. If the Nifty starts drifting below 17,650, then clearly we are breaking down and a short position should be taken using put options. If the this is all the event is over, then we are talking about the markets. If it goes above 17,800, that will be the first sign that the market is willing to break out of that trading range, and we should start beginning to add long positions. My own sense is that we should be on the upside and we should break out. The US markets are pretty cheerful, but of course the markets will decide. But these are the two key levels to watch after the news is digested, not before and not during.
Okay, all right. Thanks for that, Sudarshan. Well, let's welcome Mitesh as well into this conversation. Morning, Mitesh. How would you approach the markets? We're going to that 17,850, but getting rejected out there. How would you trade it?
Morning, Nigel. I think this market is yet not giving any kind of directional signal, in the sense that volatility indicators are still, subdued, and they are not in rising mode, which means that possibly for the next couple of sessions, and of course the price will anyways decide and break out or break down. But till then, I think the overall belief is that 17,850, 900 on the upside and about 17,500, 450 on the downside should act as the counters for the of the range of the Nifty. So I think we basically be sideways and consolidative and not give a direction move. Maybe with passage of few days, then you get a signal of some kind of volatility action picking up, and then you can prepare for a breakout or a breakdown. So till then, I think trading the index may not be a very good idea. We've been advocating that for the last few days and maintain that trading stock specific trading stocks would be the way to be in the market.
Okay. Sudarshan, what would your stock-specific trades be?
Well, again, the idea is that you take these trades only after the news event is received and digested by the markets. But I would go and buy Bajaj Auto. Bajaj Auto has seen a very significant rally after a long base building. It's a buy with a stop below 38.20. Then Manappuram is a buy. Manappuram also has been moving sideways. Even when the market was correcting, it was a little better. Momentum is rising. Relative strength is favorable. So buy with a stop under 114. Syngene has earlier come in my short list. Short selling should be done only intraday. It's again a short with a stop above 566. And finally, Coromandel is a buy. The stock is making a very attractive bullish pattern, a possible head and shoulders bullish, and buy it with a stop under 880.
And Mitesh, how about you?
So I have also more of buy calls and one sell call. On the buying side is AU Bank. Yesterday, I think was a good price action movement happening over there. Some kind of up move seems to have started. I would look at targets of around 680 there and recommend a buy with a stop below 635. The other stock on the list is ABB. Keep a stop below 29.90. Look for a first target of around 3100 which could eventually extend to about levels of 3150, 3160 as well. And I have one sell on Tata Steel. It was a sell earlier as well, but the metals pack looks to be going through some kind of a correction. And Tata Steel could possibly decline to about 104, 105 levels. Recommend a short with a stop at 114. And the final buy call is Motherson Sumi Systems, which would recommend buying with a stop at 78 for a target of around 85 on the upside.
Just two more names, Mitesh. Got those trades on board. One is Balaji Amines, cash stock. Doesn't mean volumes are not that large, but just one-way decline. I think numbers came out day before yesterday. We did put the numbers out, and it was doing okay till mid-afternoon. Collapsed 5.5–6% by close yesterday, lower. And the other one is Muthoot Finance now. It's going back into triple digits from 4 digits, almost there. Your sense?
So, I'll take Prashant Muthoot Finance first. If you look at the weekly charts, I think since June, July of 2022, the stock on multiple occasions has made bottoms around this level of 980, 960 zone. So, you can count at least 5 candlesticks touching that range. If it starts breaking below that, then I think the stock will go through a bigger correction, and 850, 840 should be on the cards very soon. So I'll keep a watch over there. And around 980, 975, if you see a reversal happening, then maybe even a long can be taken. But as of now, I think the slight bias is of possibility of it breaking down. Balaji Amines is something, which while it's not on the regular track list, but yesterday was some kind of a gap down, maybe as you said, with the event happening. And this should suggest a short-term downtrend. Targets of around 2000 and below is very possible. And I think on the upside, getting past that gap of yesterday, which is 2260 to about 2300 levels, would be very difficult. So any rallies, I would be wanting to sell this stock and maybe cover it about 10–12% lower.
Okay, so the stock has lost so much ground. I mean, 40% down in the last 12 months on Balaji Amines. Thanks a lot, gentlemen. Let's do one thing. Let's take a quick break. We'll come back with the pre-opening rates. We'll also talk about Prince Pipes. Nihar Cheda of Prince Pipes will join in to discuss their